All right, so we are looking at the E-mini S&P futures contract for March delivery 2023. And in the upper left-hand corner, this one up here, that's the hourly chart. And the lower left is the 15-minute time frame. And the larger chart to the right is the 1-minute chart. All the same market, just different time frames. All right, so if you're not following me on Twitter, you're probably not going to appreciate as much as those individuals that watched me outline this morning. It was really short, but I'll give you the context as to why I was drawing everyone's attention to the buy side liquidity and what we may or may not see going forward for the rest of the day. So the topic I want to talk about is conquering fear of being wrong versus the focus being on profitability. So if you're starting with me or in trading in general, it's easy to get inundated with the fear. And I promise it won't be a long, drawn out, boring session because I'm going to take you into the charts, but I kind of want to build a foundation here as to why I'm going to be talking about this topic and why it's something that it's important for you to tackle early on. But it's also something for you to minimize as a concern. In the beginning, when you first start learning how to trade and you're watching these charts and it looks like a foreign language you've never learned before, pressuring yourself to try to find correct entries, correct stop placements, targets, which time frame, which market should you be following, what approach or model or technique are you going to employ. Those are all normal things for a new student or trader to be concerned about. But the most significant factor in a developing student's mindset is conquering the fear of being right or wrong. And more specifically, the fear of getting it wrong. There's nothing wrong with doing it incorrectly, but there is a lot of things wrong with doing it incorrectly, recklessly, with over leveraging, over trading, and just gambling. So there's a lot of things that I teach in price action that are repetitive in nature. They tend to repeat when conditions are prone to produce the outcome that we're looking for. Now, there are times when even myself, I'll go in and I'll expect a certain price delivery, something to bring in a certain response in price action. And I try to align myself with that mindset through the charts, through my teaching, so that way my students that are following me on Twitter are alerted to where I'm thinking the market's going to go to next. Now, don't do it yet because the tweets are already there. I can't change them. I can't edit them. Okay, and you can see the responses from people that were watching it then as well. I don't delete any tweet. Sometimes I'll do a typo. I may or may not catch it, but whatever tweet I put out, it stays. So you can grade my consistency based on all of that, as well as the precision. So when we're looking at being correct or trying to avoid being incorrect, what we're placing on ourselves is an unrealistic expectation because nobody is perfect. I'm not perfect. I do get it wrong. Sometimes I miss trade. Sometimes I enter a trade and it will hit my stop loss and I never get a profit out of it at all. And there's nothing wrong with that. It doesn't mean that the model that I employ or the concepts that I use and create, they fail in my use because I'm the operator, not the concepts themselves. I've misinterpreted price. So there's a great deal of responsibility that is placed on me as the analyst slash trader while I'm trying to keep the gambler that's in all of us at bay, trying to preserve equity and keeping the hands of the gambler out of the equation. So when we look at charts, and what I'm lending you in my experience is by being on Twitter, I point to levels that I think are the next draw on liquidity. I think that providing that tool, that resource, allows my students to at least engage. And this is my opinion now. Okay, it doesn't mean I'm correct, but my opinion and my thought process is if I've been doing this for 30 years, I think it's reasonable to assume that I would have a better understanding where price is going to go than that of a new student or a new startup or someone that's casually just viewing my tweets or my content. Can I show before the fact where the market's likely to go to next and what narrative behind that exists? So if we're looking for repetitive patterns or delivery and price that should be consistent, doesn't mean it's going to be 100%. It just means that over a long sample size. What's a long sample size? Well, it's relative to whatever you think is reasonable. Yeah, I think reasonable is a year. 1 year of consistently being able to see the market real time, call it beforehand, tape reading, practicing. Then I think, in my opinion, and you may want to disagree with this, but after a full calendar year where you see all of the seasonal factors that come into the marketplace, all the seasonal tendencies, the geopolitical tug of war things that create, well, reverberations through the marketplace because those shock waves will be seen in these candlesticks. So having a full year behind you allows you to have the confidence that you've seen enough to know that this is worth pursuing. While I'm talking about this, I'm watching the 4032 level. There's buy side up there. So as I'm talking to you, I'm just thinking out loud. It doesn't mean I'm taking a trade. I've already done for today, and I'll show you why I did what I did, and we'll go over that. But I want you to think about how learning from a book, okay, learning from a course, learning from static texts that come in a PDF format, okay? They all have their place in our learning. They all have a certain measure of value. But seeing something demonstrated repeatedly over and over again, week after week, day after day, taking your focus into a specific location and price action, and then watching that price deliver real time from an alert that comes through a tweet that says, note this on your chart. This morning I noted in a tweet, I said 4028, note that level, that's your buy side liquidity. The reason why I sent that tweet out was I was watching price in here. See how it's relatively equal here? Now, retail traders, and I apologize, you're going to hear one of my boxers, Bella, she's barking, she's trying to get my attention because she knows I'm upstairs in the office. This area here, it looks like resistance to retail traders. So whenever the market looks smooth like this, I have an expression I like to use all the time. Smooth edges like to be made jagged in the marketplace. Much in the same vein, you see these relative equal lows. The market goes through them multiple times and then reacts. This level in response to this shaded area, I'll cover that also because I mentioned that in a tweet before the fact too. But I want you to think about how the things I'm showing in my tweets and in my recordings and my executions, because you're seeing one right here, it's based on things that repeat over and over again algorithmically in price. So when I'm looking at price and when I'm trying to teach you as my students, I'm not trying to put your mind into the framework of looking for pattern's sake, which is equivalent to what indicator traders do. And allow me the liberty to say that without feeling like I'm beating anybody over the head, because I know there's traders out there that use indicators and they're profitable. But I want you to just take a step back and think for a moment. If you're using, by contrast, I want you to think about what I'm teaching them and what other traders do with indicators. If you look at an indicator and you're measuring the bullishness or bearishness of a particular market on a specific time frame using any indicator, it could be stochastic, it could be RSI, CCI, MACD, you name it, whatever it is, you're attributing a religious belief that that indicator in its compression and manipulation of data, which is the open, high, low, and close that's already happened. That's all these indicators do. They number crunch. They take something that's already happened, which is what you've already seen here in this chart. These candles are representative of the raw data that the indicators use to compress and crunch and spit out some kind of overbought, oversold, or continuation or something to that effect. And when I first started as a trader, it was important for me to figure out what indicator I should be using. And over time, I learned that it's not all that important because I got caught up in, I just want to take a quick look at NASDAQ.
Hi, chào bạn từ các nước Bắc.
The indicators are not the secret. Not when I first started, I felt that it was. And I had a lot of indicators on my chart, lots of them. And it became a pursuit of finding the pattern in indicators. So one can argue, and this is my argument here, that if you're looking at indicators, you're no different than someone that looks at just a classic chart pattern. You're looking for the pattern of price delivering on the heels of something you've attributed to with a religious belief. And there's a lot of atheists in this marketplace that are still religious because they have their faith based on something that may or may not be the real catalyst for why price is going where it's going. And that to me was a big shock when I discovered that my faith that was in indicators and the use of them wasn't needed. At least for me, it wasn't needed. And it provided clarity when I removed them from the chart. And I take a step back all the time and I try to think about how I'm going to present this in a way where I won't offend someone. Because invariably, I'm going to offend a group of listeners or viewers. It's not my intent. Okay, my intent is for you to just think about it for a moment and think about how this may or may not be true for you. But when I took away the indicators, it was scary for me because I felt like I was blind. Like I didn't know what I was doing. I was trying to drive in the dark with no light. That's scary, right? So what it took for me to grow in trading naked with nothing on the chart, no indicators whatsoever, I had to understand why I'm even anticipating a specific price move in the first place. So I'm looking for reasons why the market should go higher. Okay, why should it go higher? Well, the market has gone to a specific level. It's shown a willingness to go higher. It's punished those individuals that have already tried to go long. And there's a area where traders that would be profitable as the market dropped, where would they have their stop loss? And I started thinking about the market from a cannibalistic stance. How can I devour the less informed traders? That was the mindset. So instead of going in and looking at price action with indicators over the chart, I started thinking about where are all the traders out there right now in the marketplace, where would they have an order resting, whether to get in the market or get out? Where would they have a protective stop loss? And the logic that most retail books would promote is this is resistance. So therefore, as the market drops, where would be the easiest place to place a protective buy stop, protecting that short position? It would be above these highs. That's exactly what every person that does any kind of retail level trading when you first get into the marketplace, that's the first lesson they learn. That's the first sip of the Kool-Aid that poisons your entire outlook on price. I did the same thing. I'm guilty of that too. It's hard to believe that they would allow all these books out there with all this misinformation, but yet they do. Misinformation, in the hands of someone that's reckless can cause blown accounts. I've done that. Depression, I've experienced that. Repeated failure, I've experienced that as well. That changed when I stopped forcing my treasured authors and mentors who I had foolishly placed faith in because they shown me static examples that they didn't actually trade themselves. So there's a limitation in terms of what you can learn from someone, even me. If I would have never started doing what I'm doing here, or when I was doing mentorship and showing my students daily, like you're getting the experience of right now on Twitter, stop asking me to join because I'm doing it for free, right in front of everybody. Everybody's here listening. Everybody's able to watch my tweets. Okay. That's the mentorship. You're all part of it when you go there. It didn't cost you anything but the time invested. But it's going to take you time to divulge, or for me to divulge everything that is that I want to cover. And I think a minimum reasonable expectation in terms of time is a full calendar year because there's seasonal tendencies to come in the marketplace. But you're going to see a reoccurring theme that repeats itself, that I'm taking your attention to the most important level next. Contrast that with, all right, we're going to do a market review, and here's the trade I did. I think I got in here, and I poked fun at people that's on YouTube like that. If you've taken a trade, you'll show that you've taken a trade. Why wouldn't you? Why wouldn't you do that? So it's an unfortunate thing that we as new students, new traders in development, and I was like that in 1992, we place a great deal of faith on logic that we've not proven ourselves, and we've not seen the teacher themselves prove that they understand it as well. So one of the things I set out to do as a trader is figure out why the market should go where it's going to go next. There's lots of things that you can use, even from a retail trader's perspective, to get into a trade. Getting into a trade is easy. Understanding why you're getting into that trade is more significant and more important I'm just checking down real quick. Also proving that your video isn't frozen. So knowing why the market should go where it's going to go next with a great deal of probability, statistics behind the faith that you hold in that price movement panning out on your chart. What's the logic behind that? Days, weeks, months of back testing, forward testing, and tape reading. You can't become precise with your trading without doing that. No trader, no mentor, no teacher, no course, no program, no black box thing that you can follow that gives you signals. None of that is going to bridge the gap between you trusting in the core being of who you are, the thing that you're doing, and risking potentially, if you ever decide to do this with real money. You have to have the faith that no person, no other teacher, other influence can remove your faith in what you're doing, because you've done it, you've handled it. So when I set out to figure out what it is I'm looking for in price action, I wanted to target and victimize the less informed traders, because I was tired of being one of them. And I took that anger and that resentment I had on all the time, the money I invested in things that weren't able to be profitable for me, blown accounts, failed continuously. I couldn't find traction. So I was looking for a way to take away all of those things that I discovered were the very vices that caused me to put this unrealistic expectation on myself that I had to be right. I had to be right about the direction, yes, but I had to be right about the market too. Which one was I going to trade? Because I was a commodity trader when I first started. And what time frame would I trade on? I had to be right about all those things, folks, just like you are. You're holding yourself to the flame. And if you don't know what you're doing, you'll get too close to the flame and it burns you. So I have to take away all the distractions in my perception about price and focus on where's the pain going to be? Where's the pain? Where are those bullseyes that are sitting in the marketplace? There's the stops. Above the marketplace, there's buy stops. This is buy side liquidity. This is buy stops that are pending. Their orders are just sitting there. I don't need a heat map, gimmick thing that some brokers offer. I don't need to look at level 2. I don't need to look at a DOM, depth of market. I don't need to look at any of those things. I have 30 years behind me knowing that this is where everybody's going to have their stop. This is where everyone's going to have their religious faith placed on their system, their pattern, their approach, their indicator, whatever it is they're using. And that's why the market's going to go there, because there's real orders. The market is not aware. The algorithm has no idea about harmonic patterns or supply and demand zones. Okay? That's not how these markets book. The price generates movements and price runs based on the first premise of time. If it's not the correct time of day, day of week, it's not going to deliver a specific way, whether it be bullish or bearish. Certain times the markets are predisposed to go into consolidation and range bound. That's an important factor of understanding why time is a crucial element to knowing what you're learning here. This is algorithmic theory. I'm not teaching you classic chart patterns. In fact, I will show you how those chart patterns fail, when they're going to fail. Fake bull flags, fake inverted head and shoulders, triangles. In the books, they tell you once it breaks out of these triangles, these wedges, then you go in the direction of the breakout. I don't like that because I fell victim to that. And to me, it's guessing. It's equivalent to the people that you see on social media. They'll draw a level line going up. If they think it's going to go up, it's going to go here. And if it's going to go down, it's going to go down here. I don't do that. I tell you exactly where it's going to go next. And if I don't know that, I'm saying nothing. I'm staying silent. And there's nothing wrong with that, because it's about being profitable, not being right. If I wanted to be right, my pursuit of being right was the reason why I'm even teaching, I'd be tweeting 1,000 times a day telling you the very next 1 minute or 5 minute buy side liquidity it would be reaching for, or inefficiency it would be reaching for. I could do that. I could drive you nuts. But that's not the point. The point is I want you to understand how to take everything off your chart and look at the market the way the algorithm that books price. I have floor traders in my community. Now, these folks, they were on the floor. Open outcry, guys screaming, selling five, give me five, give me. They're in the trenches, or they were. Now, electronic trading, they're dinosaurs now. And it was a lot for them to transition, and some of them were unable to transition from that way of trading into electronic trading. There's a feel that you get down on the floor that the students that I'd listened to that were floor traders would tell you. You'd see the tide turning. They don't have a chart in front of them. They have the number. They have the orders coming in. What do they have to work with? The actual orders coming in the marketplace. So that was the first clue to me, and I learned this idea from George Angel. Okay, he's an author, wrote a bunch of books about trading, specifically the S&P, and I liked more about the things he remarked about that were not that many really, but when he talked about being a floor trader and his experiences being down there and how they would sense the turn of the tide, where the direction would change in the marketplace based on the order flow coming in, the fevered pitch of how much action was coming in, and they didn't need to see a chart. And I started thinking to myself, if these floor traders are making their money without a chart and they're interpreting the future price fluctuations based on the orders that are coming in, that means that I should be able to visually see where these orders are way before a floor trader even reacts to what would naturally be when this high and this high here is taken out here, and you know what's going to happen. There's going to be a flood of orders coming in. There's going to be a fevered pitch. The market's going to be inundated with market orders coming in because these buy stops, once they're activated, they become market orders. And that intensity, that number of contracts that are coming into the marketplace that are being exchanged, that's predictable when it's down here, 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 and here. Even down here. If you look at my tweets this morning, I mentioned that there was an SMT divergence. Some of you are probably thinking, okay, what is that? I'm going to show you an indicator. Okay, this is one of my top secret indicators. You ready? Look at that. That's crazy, right? This is not oversold. This is just simply the price on a line chart on the low of the NASDAQ. Okay, you can create this on TradingView. If you're using TradingView, up in the upper left-hand corner, there's a little plus symbol. If you click on that, it'll give you the opportunity to add another instrument. So this chart here above is the E-mini S&P futures contract. And all I did was compared the NASDAQ comparably, and I clicked on New Pane. New Pane puts it down here. It's plotted on the closing. I'm sorry, it's plotted on the low on a line chart. When you first open this up and you do an overlay like this and compare, it defaults to the closing price. You don't want that. So when you're bullish, or if I'm bullish, I'm comparing and contrasting the relationship between the lows of the S&P versus the lows of the NASDAQ. And you can see how we were going below these lows here, dropped down here, but we didn't see that same thing occurring down here. We had higher lows forming in the NASDAQ. That's SMT. I mentioned that this morning in my first tweet. I said there's decoupling in the stock indices, and there's SMT divergence at the lows on on the S&P here, and that of the NASDAQ. So that set the stage for the manipulation aspect that I felt that was worth taking on the risk of going long. So if I'm seeing price, not an indicator, that's all this is. I'm comparing actual price action of closely correlated markets. I'm looking at the relationship of years, decades of experience looking at when this occurs around the opening at the opening bell at 9:30 in the morning, New York time. If I see that and there is something like this existing in price action, which is these relative equal highs, that's a smooth area in price action. The market does not like to leave smooth edges. Now, by itself, doesn't mean much at all. But when you couple that with the fact that the market's been going down, and then as this is going lower here, we've taken out a smooth area here. This is going to be viewed as what in retail mindset? Support, right? And then when it breaks through it, traders that would look for this level here as support, and they don't want to trust that it's going to go higher there. They expect it to break. They want to see that support broken, turn what? Resistance. So how are they going to be right about their trade? They're going to wait for it to come back up into this level here, and they're going to try to go short. So the traders that are in the market up here, short, they're right if it never goes back up to this level here. I'm not worried about being right or wrong. I'm looking to devour, to consume the less informed traders. And they're willingly laying their necks on my blade. They're willfully walking into the crosshairs of how I trade. They're not aware of me. They're not aware of you as my students that internalize the market like this. They're just looking at their patterns. They're looking at their indicators. They're looking at the things that their religion says should equate to profitability. But none of that stuff has any bearing on why price is going where it's going. And it's easy to convince yourself, like it did me when I had, well, very few opportunities where it panned out in my favor using specific indicators. And I know this lesson painfully because I'm preaching you what it was that I discovered how I was wrong. Because when I was doing it with these indicators and the market was predisposed to go up anyway, and I was only focusing on being a long trader, I didn't understand going short. That idea of only focusing on being a buyer when the market was likely to go up, well, it stands to reason that's the only reason why my trade panned out. It had nothing to do with the indicator, it had nothing to do with any price pattern. It was the fact that the market was going to go up anyway. So the realization I had one day, sitting in Gunpowder State Park in a hammock, looking out, reading, how I was trying to do something and forcing correct outcomes, avoiding incorrect outcomes. There's your buy side of this mention, by the way. It's one of those cherry-picked moments. The necessity of holding on to right or wrong as the outcome versus am I making money? Am I consistently able to find a way of harvesting, taking money out? And the only way you're going to be able to be assured that that's going to continue week after week, daily, every single time that you sit in front of the charts, that opportunity is presenting itself, is understanding liquidity. Because if you don't understand liquidity, and liquidity is the orders that rest above highs, buy side liquidity, buy stops, or below old lows, which is sell side liquidity, sell stops. Understanding who's going to be targeted next. Why should they be targeted next? So I don't want you as my student, if you're new or if you've been here for a while, some of my students communicate grief in their results, in their tweets. They'll say, oh, I messed up, and they almost flog themselves publicly in a tweet. And I know why subconsciously we as humans like to do those types of things. You're looking for the community, or maybe even me as the educator, the mentor, the hero that you look at me as, which I'm not. You want me to coddle you. You want me to give you a pat on the back and say, don't worry. You You'll learn how to do this one day. That's not how you are supposed to be doing it. You never, ever record anything negative, whether it be a tweet or in your journal or in your notes, or vocalize it, because your subconscious is going to remember that painful moment. And that's the very thing that anchors to the reason why you're fearful of being incorrect. Think about it. Social media has created a firestorm of that. Everybody's responding to what? Stimuli. You don't like me, I don't like you, that type of thing. Right here, there's your buy side next. Let me make sure I have it on the chart over here. Sorry. Getting lost in my discussion. So there's buy side liquidity at 40, 41, 50. So you're not trying to be liked by everybody. I don't feel bad when I win and someone lost. I don't have any concern for that, because when you open up a trading account, you understand the same risks that I did when I opened up mine. So if you lose money, whose fault is it? It's yours. When I lose money, whose fault is it? It's mine. But that problem of balancing and being responsible with the risk, as a new student, as a new trader, it's easy for someone to say, well, those brokers did it to me. And sometimes that's true, especially if you're trading Forex. But when you're trading a futures market, where it is what it is, everybody has the same high and low. It's a pure medium. But you're still going to be haunted and plagued by the desire to be right, because you think being right is safe. No one can judge you. If you're right, you should have made money. But how many times have you watched the charts and been right, but you didn't have a trade on? So you can't argue that's the reason why it's important for you to be right, because you're not even making any money when you're right. Or even if you place a demo trade, you didn't make any money. You can't go buy groceries with that. So are you still doing things properly by placing the emphasis on being correct or right versus profitability? So you have to peel that onion back and get all those dead layers off of things that you're worrying about, which is normal. Everybody's done it. Everybody will do it continuously in the future. After I'm long gone, people that will come into this industry, they're still going to have the same problems that plague them, fearful about doing it wrong. And it's normal. You know what it was like when you made the mistake of telling your spouse, your friends, your coworkers, whomever, that you're getting ready to start learning how to trade. And they probably gave you every reason why you shouldn't do it, right? Oh man, you're going to lose your rear end. I know a guy that lost. That's the first thing. That's the first thing they're going to tell you. And what are you going to remember? That. And all you wanted to do was share your excitement about wanting to learn something new and do well. Here's a news flash for you. Your family and friends, they don't really want to see you succeed. So stop inviting them into your business. They have no business in sharing the spoils and your victories. They didn't work for it. They didn't take the risk that you're doing. They're not putting in the work that you're doing. Stop inviting them in the conversation, because they're only going to bring in their perspective of why they would never do this themselves. But in your heart, you're thinking, if this works for you, you're going to help them by getting them on the same page. No, it's not a team sport. If they want to do it, and then when you succeed, trust me, you will have to beat them off you with a stick, because they're going to be bothering you constantly. Hey, can you do this? Can you help me? Can you trade my account for me? My family members do that all the time. I have family members that I cannot help. I've given money. I've bought homes for them. They still lose everything. You can't help some people. In this industry, you are by yourself. Even though you may be mentored by someone like me or someone else that's equivalent, that's well-meaning in terms of trying to protect you from yourself, knowing what it's like to do the wrong things, and also guiding you away from unrealistic expectations because you're expecting to be right all the time, never wrong. And even if you're wrong, that's going to be when you're in demo, not with your live account. That's unrealistic. You need to have a disconnect from the equation of right or wrong. It's about being profitable. And the number one thing you want to do is focus on removing all those distractions. And the first one in that is social media. Your Instagram, your Twitter worships, your Facebooks, whatever it is, whoever you're worshiping, whoever you're following along and lifting up on a pedestal. And this is why I strike down everybody that says I'm the greatest of all time, the GOAT, the king. I can't stand that. I'm not. I'm just a guy that's been blessed with this information, and I'm trying to help you with it. I want you to do well. But you have to make decisions along this process that either you're going to listen to everything I'm saying or the results that you're aiming for are going to be skewed. And that's exactly what I get from students. Some of my hardline critics are students of mine that failed themselves, not because my concepts don't work, because they themselves had the wrong mindset. They're impatient. They expected something that was unrealistic, and they didn't do the things I told them to do, which is what I'm putting all of you through this year. And some of you have seen that it's a lot more work than you thought it was going to be. Some of the folks that started this very first video of the year in 2023, first mentorship video, big, huge list of views, 200 some views, 200 some thousand rather. And as the videos would go up, less viewership, because they can't perform. They don't have the wherewithal to do it. Because inside their mind, they're thinking, I was expecting this to be easy. And it takes them back to that fear of being right or wrong. If it's this hard, I'm probably going to be wrong. Or ICT himself's, a scammer because he has rental properties and, he probably sleeps there too. No. You're going to have everybody and everything give you perfect excuses why you shouldn't do this. If you're swayed by that, you're not a trader. Because come hell or high water, someone that's really dug their heels in and says to themselves, I already know this is going to be hard. I already know it's going to take longer than I probably want it to be. But I've seen enough to know that this is exactly what I want to do with my life. I want to pursue this and I want to master myself. Notice I said master myself and not master the markets. I have not mastered the markets. I will never master the markets. How's that for a reality check? Now, I'm pretty precise. I'm pretty consistent. I can see certain things in the marketplace, and I've demonstrated that for years. My students are able to do that as well. None of us are mastering the market. The only thing we can do is master ourselves. And how do we do that? Number one, we wrestle with the idea and we hold it at bay, the idea or notion that we have to be right. Right is not always profitable, and wrong is not always unprofitable. There's many times I'll get into a trade and I expect a specific thing to be reached for. Like, for instance, we're staring at it right now, the 40, 41.5 level. I like the idea of it trading up there, but it might require going over lunch hour before it does it. Or it might just shoot up there while I'm talking to you. It doesn't make a difference to me. I'm not in the trade, but it's an expectation I have. So if I place that in front of you, you're all watching me live. If I say I believe that 40, 41.5 is likely to be traded to today, and it doesn't, what did I lose? Nothing. For some of you, you think, oh, he got that wrong. And you'll overanalyze. How did you get that wrong? Here's what he didn't see. And you'll bring all your retail stuff as to why I should have trusted that versus what I've been doing for 30 years. I don't care about the opinion of other people. That's not going to change my perspective on how I teach, what I use, what my students make money with. They're not looking at their bottom line and thinking how many times they were correct and how many times they were incorrect. They're looking at their bottom line growing. That's why you're here. You don't like me as a person. I don't give you fashion tips. I'm not here showing you lifestyle stuff. You're here because you know that I'm showing you something that repeats. And that's exactly why I want you here. That's it. You're not going to have dinner with me. I'm not going to come over to your house. I'm in your house every day, but I'm not going to visit you. Your relationship with me is I'm a conduit. I'm a pathway between where you are right now and where I know you can be. Your visibility may be limited because of experience, because of doubt, the people you hang around with, where you came from. All those things are going to be factors in why you're placing so much emphasis on being correct and never get it wrong. That's unrealistic. You need to put it aside and dismiss that. Don't worry about that. That will be an impediment to your development as long as you hold on to it. I'm going to put you through drills, live streaming. I'm going to tell you, watch this fractal here, watch this move here. Let's see if it goes to this level next. And we're going to record how much time it took, how much drawdown from the time that we would anticipate the move beginning until it trades there, or where it goes to a level that would be no longer valid for that price run. For those of you that are listening, you're thinking, that's it. ICT is giving us a secret signal. Okay, that's the buy and sell that we're looking for. If you do that, you are cheating yourself of a learning experience that you cannot get otherwise when you don't do it with money. If you place a trade based on the things I'm saying when I'm doing live streams, you're ignoring the benefit that's available by you not being swayed by the outcome. See, if I say, I think it's going to go here, and this is what we're watching the reaction here, and it should go here next, and it shouldn't go here. That's enough for someone with reasonable understanding to say, okay, he just said this is where the stop would be, because if it goes there, it's no good, and this is where he thinks it's going to go, and he's saying right now's the time it should react. So that's the buy or the sell, the stop, and the target, right? Right, I'm aware of that, but I'm not telling you a signal. I'm teaching you how to read price. And here's what's going to happen. Folks are going to go in there, they're going to press a button based on what I'm doing, and it's going to move. And then they're going to go to my Twitter feed, and they're going to try to high five me, and they're going to say, thank you, ICT. I just got my funded account. I just passed it, or I'm getting my first payout because I just took that trade. I'm not going to like your post. In fact, it offends me because you're not listening to me. That's the number one reason why I refrained from doing these types of things, because it's not helping you. As much as you think is that little bit of a monetary push, you will not be able to do it on your own. If I stop doing it, you're going to be back in that square one of, I'm afraid if I do it, I'm going to get it wrong. Versus watching the tape with me live when we do it live over the charts, putting aside the requirement for it to be on a trade that makes money or loses money. Because if you're thinking about the money, you're placing yourselves in the same category that I attack in my trades. When I'm doing my trades, I'll many times annotate, sometimes facetiously, and say, imagine you were short here. Would you feel comfortable with your stop here? And invariably, it goes right to that area where the stop is. When I'm looking at these candlesticks, I'm reading the hearts and hopes of traders out there that are just trying to do everything they can to make money with things that will never deliver that. I can never meet them. I can't get them. I can't tweet them. I can't text them. I can't call them. I can't send them an email and say, hey, you're doing it wrong. Let me help you. So I don't have any moral dilemma here. They knew the risks. And when they lose, they'll either learn how to do it better or stop trading. Either one of those outcomes is favorable. I'm still going to sleep the same way, whether those people still have an account after that loss or not. But you, as a developing student, you're placing so much foolishness on things that are controllable. And you're not placing emphasis on the things that are requiring a lot more of your time and due diligence, which is studying without any monetary commitment. Demo, not even that, no. Tape reading, what I'm putting you through, watching the tape. When I tweet, I say, this is the next level, watch that, note that. If it's above the marketplace at the time I tweeted it, my bias is what? Bullish. I'm expecting it to go up. To what zone? No, to that level, to that price level. It might sweep through it, that's fine. But that's the level I want you to be following and watching when the tweets go out. If the market price that I'm telling you to note on your chart is below the market price at the time of the tweet, I'm signifying that I believe the next run to be focused on is going down. Isn't that pretty easy? Now, I still get criticized, and I don't give a rat's rear end, from people that just simply want me to spoon feed them. I am spoon feeding you. I have a 24 karat spoon every day on Twitter. All you have to do is show up. You have to study the things that are in my videos, and you'll see your pattern form. The thing that you're going to be utilizing to make your trades on your own, independent, without me saying anything, that will come by you watching the tape, using my experience, borrowing my experience of where I think the market's going to go next. There's going to be times when I get it wrong, but that's going to be far less than you would have been doing it. And that's all I'm suggesting is that use it as a crutch. In the beginning, there's no shame in that. No shame at all. There's no shame in learning how to trade in demo. There's no shame in teaching in a demo. If an educator goes out there and says, hey, I'm responsible. I don't want to see any of you hurt, and also I want to protect myself because I'm not a licensed trade advisor. I'm not. I'm not a financial advisor. And by talking about charts like this, there was no button being pushed. In fact, I've actually told you not to do it. But the skill set of reading and interpreting price action by doing these exercises and spending time with someone that knows how to do it, whether they're doing it for the demo, whether they push a button or not, if the market pans out continuously over time, repeats, there's something there that's worth mining. There's some kind of insight that's worthwhile to extract from that medium or person. And if you foolishly place a trade on anything that I say or someone else says, and you don't know the logic as to why it's being considered as a trade, your attention is not going to be on the things I'm going to say, draw reference to. You're going to be watching the profit and loss up and down as the fluctuations occur. You're going to zone out. You're not going to hear the things that's going to be more pertinent to you to know how to do this independently, because you're fearful of what? The outcome now not being profitable, and you're not going to listen to anything else. It's the same thing that everybody does when they watch a book or join a course, or they follow somebody that thinks they're the bee's knees in trading, and they're talking about where the market's going to go next. And you're all out there trying to line up to do trades based on whatever they say. You have no idea what made that person say it's going to go where it's going to go in their analysis or their call or signal. To me, that's the epitome of gambling. You have no reason why you should trust that. What's the logic? Contrast that with me. I'm literally trying to explain to you why these price patterns should form, when they should form, how you can trust them when you know they can fail. And I'm also teaching you in certain instances, there's an environment that you don't want to be taking a trade in because the risks are too high versus the potential reward. That's a skill set that you can't learn from a book. You have to be side by side with someone. There's literally no way to learn that except for walking hand in hand with someone on a daily basis, a weekly basis for months, in my opinion, a full year. You'll appreciate managing the risk more appropriately by doing it. And at the end of the year, you're going to look back and say, you know what? I'm glad I didn't push myself into trying to trade before I was ready. I'm confident that there are going to be many of you that won't listen to what I just said. You're zoning that part out. because you need to make your ends meet. Groceries are more expensive, bills are going up, rent's higher, gas, electric, natural gas, even eggs, 400% increase in egg prices. I get it, but you can't speed up progress. You can't. Your progress is going to be uniquely your progress. And don't measure it against somebody else that you may be seeing do very, very well. You might see someone that you're friends with online. They came to the same place that you're at right now. They're trying to learn this stuff. Great. And they may do far better, faster, or give you the impression of doing it better. And you might think, well, that means I'm not good enough. I'm not a good enough student. I must be slower mentally than that person or everyone else. I have students that started with me in 2016, paid me money, and learned the same lessons that people that are making money right now learned, but they can't do it themselves. And the common denominator is how much they put into it, what they're holding on to in terms of fear, just doubt, and just doing the work. And the work is sitting in front of these charts and watching price action. You might not be a trader that has the ability to trade intraday. May not be within the realm of, well, possible for you. You might need to trade a higher time frame. Don't discount what I'm showing you, because everything that occurs in these 1 minute charts is applicable to a daily or a weekly. It's the same things. It just takes a lot more time to pan out. So there's no reason for you to have these unrealistic expectations about being right or wrong. It's about being profitable, and your ability to be profitable, once you latch on to whatever it is that I'm teaching that you like. It might not be a fair value gap. It might be an order block. It might be the breaker. That's your only model you care about trading. That's it. That's your multiplier. That's the thing that you're looking for. Okay. What's wrong with that? Just because your entry is going to be different from somebody else, you might make less on your trade than the next trader. Is that trader going to give you any of that profit? No. Is it realistic for you to expect them to do that for you? No. You should be content with enough. If all you do this year is develop a skill set that allows you to reduce some of your overhead costs living day to day for you and your family, is that not a success? How many of you considered that? That was the reason why I made that ends series on my YouTube channel. To ground some of you younger folks that are just so worried about going out there trying to get Ferraris and Lamborghinis and such. They're fun. I get it. But once you own them and everybody knows you have them, nobody cares anymore. And you're still stuck with the insurance, the upkeep, and the worrying about somebody scratching it. And you're never going to want to park it somewhere and walk away from it, because those types of things happen. More money, more problems. Reverse it and say, how can I use this skill set to help remove anxiety? Whereas right now you're using it as, this is the reason why I'm anxious. This is the reason why I'm having anxiety, because I can't figure this stuff out. When you just need to relax and understand that not every single moment of the day is an opportunity, and it's not realistic for you to see it. You're still learning. But being fearful of the outcome is always attributed to because you have money on the line. That's not to say that when you start trading with live funds, should you decide to do so, that you shouldn't be concerned about the risks. Yes, you should be. But it shouldn't be paralyzing. I'm about to work with my son, Cameron. I mentioned the other day, he said he wanted to do a funded account. He watches my videos, and obviously you see the advertisements, people, run ads on YouTube, and he watched this Top Step thing. I have no affiliation with Top Step. Okay. I'm just being open with you. I know my son said he wanted to do it, and he does not want to have a Twitter account, doesn't want to have a YouTube channel. And frankly, I think that's great. And His words were, "I don't care about anybody else liking me, Dad. If I can make money with it, that's all I care about." How proud, how proud was I hear him to say, say something like that? Because, you know, I don't see that as somebody that's selfish and greedy. That's someone that's got it figured out early on. If you're going to do this, only do it because you want to make money. I don't care who likes me. You shouldn't care who likes you. Do you think it's going to matter when you figure out what you're doing and you conquer this fear of being right or wrong and you're able to find consistency? That means making and losing money, but over time, you're making more than you lose. That's trading. Do you think that anybody is going to convince you that you've wasted your time when you start making money? No. You're not even going to give them the time of day. And to hear my son say that he's not interested in that, he only wants to make the money, that's the proper mindset. But he admits that he has a fear, which is reasonable, of pushing the button. He goes, I can see that fair value gap, but I'm afraid if I go in and I push the button, Dad, I'm afraid it won't pan out for me. And I don't want that transaction to be, painful. He plays video games. So he's trained himself, conditioned himself into what? New high score all the time. New high score all the time. New high score all the time. And that's fine for video games, but this is not video games. This is financial ruin if you let it happen. So it's important for you to understand there are times when right or wrong is important, but right or wrong isn't terribly important while you're learning. You need to learn how to balance that. And one of the things that I'm going to teach him, and I'm going to teach you all as a result of being a part of the program with my son being a developing trader, is that I'm going to put him into situations where I desensitize him. I was afraid of putting on trades like that too. And hearing it come from my experiences, it only has so much help. So I have to show him how to desensitize yourself from fear of doing it wrong. We will be doing live streams. I'm thinking about this because I know there's people out there saying I do this all the time. I do reset my account for other reasons, but this is the
Over 10,000 people have died in Gaza.
This is the demo account that I showed you guys the other day. I saw some joker say, "Oh, he blew his account. That's why he's talking about something else." Huh? Let me scrub this up here. Now I tweeted. You can see all the dates and stuff here. It's only been 2 trades. This is nothing. It's paper trading. It's stupid.